March 28, our weekly market update. Anecdotally out in the field, there's been plenty happening. It's tough, as everybody knows, you read all about that, but we are getting the sales, and the reality of the market is that there are plenty of buyers. So many of you out there looking to buy a property, all of you playing hardball, so thanks for that. It makes it hard for a real estate agent, but that's okay. And as owners of properties, I think there's an absolute realisation of the market has shifted to a new spot, and it seems quite stable at that new spot. But if the pricing is not absolutely spot on, then the property will sit for months and months and months on the market, and the buyers just sit back and wait. But essentially the difference between the late 80s and now is that there are lots of buyers, and the reality is that when people do decide to sell, they just make that fine-tuning of their price and away it goes. And quite often with multiple buyers. In fact, we had 6 registered bidders at an auction on the weekend that had been on the market probably for some time, and then we ended up getting a reasonable result and with multiple bidders, so multiple buyers. So they're out there. Now, just the latest report from RP Data, it's the RP Data Baseline Equity Report. So let me read just a couple of lines out of this, and it's a bit of a technical report, but some of it you'll find quite interesting. The headline result, so they use all these big terms, the headline result from our baseline equity analysis reveals that 6.4% of Australian homes are currently valued at a lower amount than the price for which they were purchased. That's interesting, not so great if you're an owner of a property, except the second part, and this is the end of the paragraph, and it reads, at the other end of the spectrum, about 42% of Australian homes are worth more than twice the figure that the owners originally purchased them for. So what that's saying is that there's obviously people there that have actually purchased properties and the values have dropped, but by the same token, people who've owned the properties for a longer period of time are sitting in homes that are worth double what they paid for them. Now, what about South Australia? Just a couple of quick excerpts from South Australia. The southeast region has the greatest proportion of properties where the current value is below the purchase price, with 8.3% of all homes in this position, up from 7.5% last quarter. And the northern region has South Australia's lowest instance of negative equity, with just 5.4%. And what about Adelaide itself? Well, the capital city of Adelaide has a negative equity of only 5.5% of all homes. So what does that mean? That means that the market has changed, it's real, it's happened, it has settled, and now, I think, particularly right now, would be as good a time as ever to be buying into the market. So if you're an investor, or you have some spare cash, or maybe you're renting at the moment, I think it's a pretty safe time to be buying, particularly here in South Australia. And that ends our weekly wrap-up.